Let's start. Cash flows from investing activities. The investing activities section of the SCF reports the cash inflows and cash outflows related to the changes that occurred in the non-current, long-term, assets section of the balance sheet. Examples of investing activities include the following: capital expenditures, additions to property, plant and equipment. Proceeds from the sale of property, plant and equipment. Purchase of long-term investments. Proceeds from the sale of long-term investments. Our discussion uses example corporations' cash flows from investing activities. Capital expenditures are the amounts spent for acquiring, adding, and/or improving non-current assets used in a business. Large amounts spent for repairing an existing asset are reported as expenses on the current period's income statement. Since the amount spent by example corporation for capital expenditures required an outflow of cash, the amount appears in parentheses, $300,000. You can also think of the amount spent as unfavorable for the company's cash balance and/or cash used. Proceeds from sale of equipment $40,000 is a positive amount since this is the amount of cash that was received. In other words, the $40,000 was an inflow of cash and therefore favorable for example corporation's cash balance. Also see our discussion of cash flows from operating activities for the reporting of the gains and losses on the sale of non-current assets. Amounts spent to acquire long-term investments are reported in parentheses, since it required an outflow or use of cash. The proceeds, cash received, from the sale of long-term investments are reported as positive amounts since the proceeds are favorable for the company's cash balance. Cash flows from financing activities. The cash inflows and outflows from financing activities are related to the changes in the following balance sheet sections: non-current, long-term, liabilities. Stockholders' equity, or owner's equity. Loans and similar debt reported under current liabilities. Examples of the descriptions and amounts typically reported under cash flows from financing activities include the following: proceeds from long-term debt. Repayment of long-term debt. Proceeds from issuing capital stock. Payment of dividends. Purchase of treasury stock. Change in short-term debt. Our discussion of financing activities will use the following section of example corporations SCF. Assume that example corporation issued a long-term note loan payable that will come due in 3 years and received $200,000. As a result, the amount of the company's long-term liabilities increased, as did its cash balance. Therefore, this inflow of $200,000 is reported as a positive amount in the financing activities section of the SCF. Next, assume that example corporation distributed $110,000 of cash dividends to its stockholders. The $110,000 cash outflow has an unfavorable or negative effect on the company's cash balance. As a result, the amount will be shown in the financing section of the SCF as $110,000. When example corporation repays its loan, the amount of the principal repayment will appear in parentheses, since it will be an outflow of cash. If example corporation issues additional shares of its common stock, the amount received will be reported as a positive amount. Reconciling the increase in cash from the SCF with the change in cash reported on the balance sheet. The 3 net cash amounts from the operating, investing, and financing activities are combined into the amount often described as net increase, or decrease, in cash during the year. In example corporation, the net increase in cash during the year is $92,000, which is the sum of $262,000 plus $260,000 plus $90,000. As was shown in the example corporation's SCF, the net increase for the year was added to the beginning cash balance to arrive at the ending cash balance. The ending cash balance should agree with the amount reported as cash on the company's December 31, 2022 balance sheet.